Hi guys, welcome to my YouTube channel. Here I am back with another informative video. So the topic of discussion is the benefits of the health saving account, the ultimate guide to health saving accounts. So making the most out of your health saving accounts can help you both now through the tax deductions and in future through the tax-free withdrawals for the qualified medical expenses. The health saving accounts is only the triple tax-free account in the US. The funds contributed to an account are tax deductible when you put the money in, and they grow tax deferred over the time. And if you use funds for the eligible health expenses, the distribution are tax free. What is a health saving account? What are the tax advantages of the health saving account? What are the HSA maximum contribution limits for the 2024, and what are the HSA maximum contribution limits for the 2025 and 2026 HSA contribution limit projection? What are the HSA eligibility rules? How to maximize your saving accounts HSA contributions? Max your contributions, then invest your HSA contribution, save your medical receipts. How much can I contribute to an HSA if I am only eligible for the part of the year? Which medical expenses count as the qualified expenses? How can you use an HSA for the retirement saving? How do HSAs work with the Medicare? So, what is a health saving account? And health saving is account is a type of the savings account that allows you to set aside money on a pre-tax basis to pay for the qualified medical expenses. This include everything from the doctor's visit and the prescriptions to dental and the vision care. To be eligible, you must be enrolled in a high deductible health plan. What are the tax advantages of a health saving account? On the most compelling benefits of a health saving account is its triple tax protection. The first one is tax reduction, then tax free growth, and tax free withdrawal. Contribution to an HSA are tax deductible, reducing your taxable income in the current tax year. Tax free growth, the money in your HSA grows tax free, meaning you don't pay taxes on the interest or the investment gains. Tax free withdrawals, funds can be withdrawn tax free when you used for the qualified medical expenses, which can be significant advantages as healthcare costs typically rise with the age. What are the HSA maximum contribution limits for the 2024? The 2024 HSA individual self only limit is $4,150. The 2024 HSA family limit is $8,300. The 2024 HSA catch-up contribution limit is $1,000 per person over the age of 55. You have until April 15, 2025 to make a 2024 plan per year contribution and get the tax deduction. What are the HSA maximum contribution limits for 2025? The 2025 HSA individual self only limit is $4,300. The 2025 family limit is $8,550. I project the 2026 HSA individuals limit will be $4,400. I project the 2026 HSA family limit be $8,750. What are the HSA eligibility rules? You are eligible to contribute to an health saving account if you are covered under a high deductible health plan on the first day of the month. You have no other health coverage except what is permitted under other the health coverage. You are not enrolled in the Medicare. You can't be claimed as a dependent on someone else's current year tax returns. Since HSAs are the only triple tax advantaged account, it helps to get the most out of your HSA. Remember three works: max, invest, and save. Max your contributions with the added advantages of the health saving account over the Roth IRA and the 401k. Try to maximize your HSA contributions each year. Quite commonly, when you contribute to an HSA through the your paycheck, you might think that the max is only what went into the HSA through the payroll. That is not the case though. The 2024 HSA individual self only limit is $4,150. The 2024 HSA family limit is $8,300. The 2024 HSA catch up contribution limit is 1,000 per person over the age of 55. You might think I put in $100 paycheck, my employer put in $500 for the year and I can't contribute anymore. That's only $3,100 in this example. If you have self only coverage, you could put in another $1,050, and if you are over 55, that's another $1,000 on the top of that. And if you have a family coverage, that's there is 5,000 plus dollars you can add in this quite common scenario. You might also think I can't contribute anymore to my employer's HSA. While that may be so true, and it is probably is not, you can open up to an health saving account with any provider. You are not tied to the default HSA provider that your employer uses for your payroll contributions and the employer contributions. Another way to max your contributions is to leave them in there and not to take a contribution right away in the same year. So many of people confuse the rule for the flexible spending account that you have to take your money out in the same plan year with the HSAs. You do not have to spend your HSA dollars in the same year that you put the money in. You can let your HSA dollars stay in the health saving account for the future year. This is especially beneficial if you invest your money. Many people don't realize they can invest their HSA contributions. Chances are they are defaulted to an interest rate account through the employer's HSA provider. Chances are there are other investment options that allow you to participate in the stock market within that employer choose an HSA provider. If you are going to keep money in your health saving account over the long term, you should consider making use of those investment options. If your current HSA provider doesn't offer investment options like many health saving accounts through a bank, you can transfer to a new provider. Imagine how your money could grow at even 5% in the market compared to the close to 0% in the interest rate option. Save your medical receipts. You might be wondering, how can I get reimbursed from my health saving account, especially if I don't take the money out in the same year that I contributed? The answer is to save your medical receipts, because you can reimburse yourself in the future of for the medical expenses you have already paid for out of pocket. So here's the rules. First one is the medical expenses must be from the year you established your HSA or dated. The medical expenses had not been previously paid or reimbursed from another source like a health reimbursement account or the flexible spending account. As an example, the medical expense wasn't deducted on your tax return in any year. Perhaps you contribute $5,000 to your health saving account in 2024. Later on, it grows to $7,000. If you have the receipts for the $700,000 plus in the medical expenses that meets the rule, you can withdraw that money out to reimburse you for those qualified expenses. If you are eligible for an health saving account for only part of the year, then you can make a pro rata contribution. If you are eligible for 6 months out of 12, then it's half of the annual limit, and 2 months and or the 7 month out of the 12, then it's 2 by 12 or 7 by 12. If you are eligible for an health saving account in the last month of the year, then you could contribute the full amount of the tax year and don't have to consider the pro rata rule described above. You don't have to be eligible for the health saving account the entire next year to be make use of this rule. So that was all about the topic. Hope this will have been beneficial for you. So do subscribe the channel for more videos. Thank you.